Hi everyone, this is Pete here. I just finished listening to the earnings call of Tesla Q3 results. What are the main highlights and where do I think Tesla is going to go from here? Let's dive straight into it. Let's dive straight into the Tesla Q3 highlights. The first thing you will notice is that Tesla was not even at a conference call. The conference call was dedicated to his two lieutenants, Zach Kirkhorn, the Master of Coin, CFO, and Andrew Blaglino, which is the SVP of Engineering. And I think this is a brilliant move because many of the critics of Tesla have been talking about Tesla being a one-man show where Elon Musk has to be at every single event. So this goes to show you that Elon Musk is listening to them and he's trying to make the company not just around him, and at the same time allowing his lieutenants to rise up to the occasion, which I think is fantastic. And Zach gave a lot of good highlights in this earnings call. So, for example, this is a very quick snapshot on how is the financial situation doing. Let's take a quick look. Over here, the first thing you'll notice is that everything is going to the top right hand corner, right? The operating cash flow hit a high of $3.1 billion, and that resulted in a $1.3 billion free cash flow, which is fantastic. And also the net income went further to $1.6 billion and adjusted EBITDA hit $3.2 billion. Now, these numbers would not be fantastic if Tesla has been increasing their vehicle price. On the contrary, Tesla achieved all of this on the fact that they have been reducing their average selling price by about 6% year on year. So this tells you that not only Tesla is producing cars that are cheaper for consumers, they are making the whole operation more efficient than ever. And this is also shown in their automotive gross margin, which is slightly more than 30%, which is really unheard of in the automotive industry. Now, the next thing is Tesla is financially stronger, right? They managed to pay off $1.5 billion of debt, and their total debt right now is only at $6.4 billion, down from year on year $10 billion. And you will notice that the operating expenses in terms of percentage is dropping, and this could likely be due to the higher take rate of FSD, which was mentioned by the CFO, and also the fact that they are looking at increasing the price of the FSD. So for those of you who are driving a Tesla out there, if you're hesitating whether to take on the FSD, this is your very big hint. Next, 2022, next year is going to be a fantastic year, a huge year for Tesla. Why? Because Austin and Berlin factory are going to start producing and delivering cars. So this will add on to the financial report for Tesla in next year. And they have already hit 1 million car deliveries this year. And they're targeting 20 million car deliveries per year in the long run. Now, how do they intend to achieve this? They intend to go into all major categories of cars, right? From a sedan to a SUV to a truck and maybe even an ATV. And this, they say, will continue to grow at an average growth rate of 50%. So you can see over here right now, we are only having Shanghai and the two California factory. However, this will change once Berlin, Texas come online and maybe even other places starts to come online, right? So take note, they have mentioned that they're going to hit 20 million and 50% per year. That's an outrageous goal, but guess what? Tesla has always been setting crazy goals and time again hitting them. Now, one of the most important things that I thought will really add on to their financial situation is that the insurance is coming in. Now, their insurance is based on a safety score, and right now it's on 150,000 Tesla cars. And what it does is basically monitor the driving behavior of Tesla drivers. So if you're a better driver, you'll get a better insurance premium. And I think this is fantastic because there should not be a case where good drivers are subsidizing poor drivers in this case. And going into the future, guess what? I would say all Tesla cars will be taking on Tesla insurance because only Tesla has all these data points, all this information to decide which are the good drivers and which are the bad drivers, which other car companies or other insurance companies are unable to provide. Therefore, in terms of competitiveness of the premium, Tesla will be the highest. And really coming to the tail end of the whole earnings is that they managed to achieve all these results on the fact of some tailwinds, right? Firstly, they have 30% less green credits this quarter. They have increased supply chain costs as well. And they even booked in a $51 million paper loss on their Bitcoin investment. And last but not least, they also mentioned that including the Fremont factory, all the factories right now are not running at 100% due to shortages caused by COVID. So this tells you really the fact that if Tesla were to at a better situation, without shortages, without booking unnecessary losses on Bitcoin, they would have provided a much better result for this quarter. So that's my summary of the Tesla Q3 highlights. What do you think? Did I miss any portions? Let me know in the comments. Do you think this is good or bad for Tesla going forward? Do you think Tesla is really going to hit the price target set by Cathie Wood, which is at least $3,000 per share in the next couple of years? Hope you liked the video. Do subscribe as well, and I'll see you next time. Bye!